Hello, hi guys, how are you? Hope you people are doing well. Even I am fantastic. Now in the today's class, we will be starting with the audit of banks, bank audit you can say. If you see this chapter, it is a very lengthy chapter. There are a lot of concepts in this chapter, but the weightage of this chapter is just 4 marks. This is the weightage of this chapter. This chapter, it is mainly imported from practical point of view, not from exam oriented angle, but from practical point of view. This chapter is very important because after completing CA, if you wish to do practice, then this bank audit will be your main source of income. Almost most of the chartered accountants who are in practice, their most of their income comes from bank audit only. You will be having just some 10 to 15 days of work in a year, and you will be easily getting minimum 4 to 5 lakhs of fees per year. So this is one of the main source of chartered accountants who are in practice. But recent days RBI it is reducing the scope of bank audit because almost all the systems of bank are automated and they are centralized. So RBI is feeling that they don't wanted to conduct bank audit. Okay, they are trying to make this bank audit optional. If bank want, they can conduct a bank audit, otherwise not. But still, as of now, bank audit is mandatory for almost all the banks. There is a you'll be having recently only the fees of bank audit is also increased by 10%. So I guess by 10 years, okay, from this date, in the coming 10 years, RBI will reduce the number of branches that are covered under a bank audit. Slowly it will reduce the scope of bank audit, but as of now it is important. Now if you see the structure of bank audit, banks generally how they will function is, let us take example SBI bank. Now SBI will be having head office. Basically I guess SBI head office is in Mumbai, and in various cities, various states, SBI will operate in the form of branches. You will find branches of SBI, branches. Now here every year the branches of bank has to be audited. So for each of this branch auditor will be appointed. You can call him as statutory branch auditor, SBA, statutory branch auditor. Like this, for every branch a statutory branch auditor will be appointed. And for bank as a whole, statutory central auditor will be appointed. Statutory central auditor. SBI means statutory branch auditor. SCA means statutory central auditor. Generally 4 or 3 or more firms together will be appointed as statutory central auditors. Joint auditors will be appointed to conduct central audit. Now here if you see, these branches are there, they will prepare their own financial statements. Basically they will not prepare in their software the balance sheet and profit and loss. These statements will be automatically generated. Like this, for every branch financial statements will be generated. Now branch financial statements will be audited by statutory branch auditor, and he will send this branch audit report to the central statutory auditor. Based on the branch audit reports, the central auditor, he will give main audit report. Okay, he will conduct audit at the bank level. Central statutory auditor will conduct the audit at bank level. Branch auditors will conduct the audit at branch level. So in case of bank audit, there will be two auditors. One is statutory branch auditor, statutory central auditor. Okay. So this is a brief idea of bank audits. And to get branch or bank audits, you need to empanel with RBI. Basically every year our ICAI, basically RBI is having power to empanel chartered accountants, but RBI has given that power or delegated that power to our Institute of Chartered Accountants of India. So every year you will be having MEF. So basically it is a empanelment of CA funds which will be maintained by our ICAI. You have to give your details, you have to list your firm in that MEF, and once you have listed in your firm name in the MEF, every year if you are eligible, bank audits will be allotted to you. That is a procedure. Now if you see, bank audit is somewhat different when compared to normal company audits. Even banks are also companies, but conducting audit of bank is different from conducting audit of normal companies. Why? What are the special features of banks which makes bank audit so special when compared to other companies? If you see, the risk associated with banks is very high. Why the risk is high? Because they deal in cash and they will give loans to the public. Generally, if you give a loan, there is a high chance of default, high chance of becoming the loan NPA. So the banking business is very risky. The risk involved in banking business is very high. This is one of the feature that differentiates bank audit from a normal audit. See, the particular nature of risks associated with the transaction undertaken by a bank. And the second feature that differentiates bank audit is banks, they will operate through branches. They will be having branches, entire countrywide they will be having branches. So their scale of operations is very huge. This is also one of the differentiating feature between a banking company and a normal company. So scale of banking operations is very huge, and extensive dependence on IT. In case of banks, most of the transactions they are automated. If you want to withdraw money, you will be using ATM. Nowadays, if you want to deposit money, you will also use ATM, and to deposit check also you can use check deposit machine, and there is also internet banking facility. Almost all the transactions you can do at your doorstep without visiting the bank. So to enable this, to enable the customers to do transactions at their doorstep, extensive use of information technology is very essential. So even extensive use of information technology also differentiates a bank audit from normal audit. And the effect of statutory and regulatory requirements. If you see, for a banking company, there are numerous laws that are applicable. You can see, if you see the legal framework, there are 13 laws that are applicable for a bank. So auditor who is conducting audit of a bank should audit the bank from the point of view of all these laws. All these, the provisions of all these laws has to be taken care during the audit. Let us see what are the various laws that are applicable to a banking company. First one, we have Banking Regulation Act 1949 and State Bank of India Act. Basically, State Bank of India Act will be applicable for SBI only, not for other banks. And RBI Act, Reserve Bank of India Act, Companies Act, even Companies Act will also be applicable to a banking, banking company, because even the banking company is also a company. So even Companies Act will also be applicable. And Banking Companies Acquisition and Transfer of Undertakings Act 1970. Basically, this act was enforced to merge various banks. Okay, at the time of nationalization, various banks have been merged to form, single banks. To enable that transaction, this act has been, taken into account. Next, Regional Rural Banks Act, Banking Companies Acquisition and Transfer of Undertakings Act 1980, and Information Technology Act, Prevention of Money Laundering Act, PMLA. We will be reading this PMLA Act in our paper 4. We are having a Prevention of Money Laundering Act in the law. Next, Securitization and Reconstruction of Financial Assets, SURFACE. If you have taken elective as paper 6D, in paper 6D you will be reading about this SURFACE Act. And Credit Information Companies Regulation Act 2005. Basically, we are having various credit information companies like CIBIL, ICRA. These are various rating companies. These companies will be regulated by this act. And Payment and Settlement Systems Act. Payment and Settlement System is to enable clearing of checks. Even UPI payments will also be coming under Payment and Settlement System. And Cooperative Societies Act 1912 for cooperative banks. So these are the various legal frameworks, various acts that are applicable for a banking company. So this diversified legal framework will also differentiate a banking auditor from a normal auditor. And the continuing development of new products and services and banking practices which may not be matched by the concurrent development of accounting principles and auditing practices. If you see, in a banking company, they will be launching various products. They will be bringing insurance products, they will be bringing mutual fund products, they will be bringing investment options, they will be bringing various types of deposit options, they will be offering various loans, they will also be bringing credit cards, they will be offering cash credits. Like this, various products will be available with a banking company. Now, to make accounting for each of this product, basically the banks, they will be bringing new products. Okay, frequently they will be bringing a new products, and to match the accountability of those products, the accounting principles and auditing principles that are available as of now has to be continuously continuously they have to be developed to match the new products that have been brought by the banking companies. So even this is also one of the differentiating feature of a banking audit from a normal audit. So these are the factors that give rise to special considerations in case of a banking audit. Now, if you see, for a normal company which is registered under Companies Act 2013, they have to prepare balance sheet and profit and loss account as per Schedule 3 of the Companies Act. Now, even banking companies also, they have to prepare this balance sheet and profit and loss account. Financial statements has to be prepared. Now, what is the format for preparing financial statements by a banking company? Because format that is applicable for normal companies cannot be made applicable to a banking company, because the main business of banking company is to give loans and accept deposits, and the main income of the banking company will be interest income, and main expenditure will be interest expenditure. So the format in which financial statements has to be prepared by a banking company has been specified in Banking Regulation Act. In Companies Act we are having Schedule 3, right? In that Schedule 3 there is format of financial statements, right? In the same way, in the Banking Regulation Act also there is Schedule 3. In that Schedule 3, the format of financial statements for banking companies prescribed. If you see, Form A deals with a format of balance sheet and Form B deals with a format of profit and loss account. So as per those formats, financial statements has to be prepared, and every banking company needs to comply with disclosure requirements that are applicable under accounting standards. Now you might get a doubt, sir, Companies Act section number 133, it prescribes certain accounting standards. Accounting standards that are issued by our Institute of Chartered Accountants of India, they will be applicable for companies. Whether those accounting standards and Indian accounting standards are applicable for banking companies also, the answer is yes. For banking companies, Indian accounting standards are applicable. So the disclosures that are required as per Indian accounting standards has to be present in the financial statements of a banking company. Hope that is clear. And preparation of balance sheet of a bank usually involves the preparation of standalone financial statements. Basically, I have told you now, there will be various branches. Each branch will prepare their own financial statements, and all these financial statements will be consolidated to prepare a single financial statements for the entire bank level. And banks that are listed on stock exchange, they have to comply with LODR regulations, listing obligation disclosure requirements. We have discussed in corporate governance, audit committee and corporate governance chapter, we have discussed that LODR regulations are post listing regulations. These LODR regulations will be issued by SEBI. So if a banking company is a listed company, then it should also comply with these LODR regulations. Hope that is clear. Next, appointment of auditor. Who will appoint the auditor in case of a banking company? Let us see. Who appoints the auditor? First of all, to be appointed as an auditor, you must be a chartered accountant in practice. Only chartered accountant in practice can be appointed as statutory auditor. Hope that is clear. Now, who will appoint the auditor? In case of a nationalized bank, auditor will be appointed by bank through its board of directors. Okay. In case of nationalized bank, auditors of banking company will be appointed by board of directors. And in case of other banks other than nationalized banks, shareholders will appoint the auditors. Now in both the cases, whether in case of nationalized banks or in case of other banks, approval of RBI is required. See, in either case, approval of Reserve Bank is required. Nationalized bank auditor will be appointed by board of directors. Other than nationalized banks, auditor will be appointed by members. And both the companies, whether it might be nationalized or other than nationalized, before appointing the auditor, they have to take approval of RBI. Okay. Now coming to State Bank of India. In case of State Bank of India, auditor will be appointed by Comptroller and Auditor General of India. Comptroller and Auditor General of India, C&AG. We have discussed regarding this C&AG in PSU audit, Public Sector Undertakings Audit. So, in case of SBI, only for State Bank of India, auditors will be appointed by C&AG. And coming to regional rural banks. What are these regional rural banks? Basically, these banks, they will be established in rural areas. You will be finding like Andhra Pragati Gramina Bank. All these Gramina banks, they are regional rural banks. These regional rural banks, they will be established by central government, state government, and one of the commercial banks. All these three people together, they will establish regional rural banks. Okay, there will be share of all these three people in regional rural banks. Commercial banks means various bank like State Bank of India, Bank of Baroda, they will be coming under commercial banks. We will be calling them as sponsor. Okay, they are sponsor bank for the regional rural bank. This concept, however, it's not there in the syllabus, but just for understanding, I'm telling you that. So in case of these regional rural banks, the auditor will be appointed by concerned bank itself with the approval of central government. Concerned bank means board of directors of that bank will appoint the auditor with the approval of central government. So in case of different types of banks, different people will be appointing the auditor. Here in this, you need to remember this point, State Bank of India. MCQ might be asked from here. Who will appoint the auditor in case of State Bank of India? MCQ might be asked. Now if you see this bank audit chapter, it is very lengthy and the weightage that has been allotted is very less, you can say just 4 marks. So what I would suggest is you go through this chapter. After completing all the chapters, you give least preference to this chapter considering the weightage and the length of the chapter, and also most of the questions of this chapter, they will be like in a practical oriented point of view. Okay, if you have in your articleship, if you have conducted bank audit, then you can easily answer the questions that are asked in the bank audit chapter. So you need not mug up these answers. You can just go through the verification points. Okay, there will be various areas and how you will audit that area. The questions that are asked from this chapter will be like this. Okay, there will be cash. How will you audit the cash? What are the internal controls that you will check in the cash? Okay, most of the questions will be like this. Loans and advances. What will you audit in case of loans and advances? In case of agricultural loans, what will audit? In case of credit card operations, what should be the internal controls? What are the audit procedures that you will perform? The questions will be of this format. So once you are having a practical knowledge of auditing these areas, then you can easily answer them in the examination hall. So you need not mug up the questions in this chapter. You just need to understand them. That's it. Okay. Stages of bank audit. Basically, not only bank audit, any type of audit, there will be similar stages. There will be initial considerations. That means before starting the audit, you will perform pre-engagement aspects like communication with the previous auditor, drafting engagement letter. All this will be coming under initial considerations. And once the audit has been accepted, once you have started the audit, what you will do is you will first of all understand the business of the entity. Okay, understanding you will obtain. Through this understanding, what you will do is you will come to know inherent risk. Okay, that only you will do here. Risk assessment, where you will assess inherent risk, control risk, and based on that you will determine risk of material misstatement. That is risk assessment. Once you have assessed the risk, you have found out the risk of material misstatement, you will design further audit procedures to counter that risk of material misstatement, which is the actual execution stage. And during execution stage, you will find some observations, and based on those observations you will develop an opinion, and that opinion you will convey to the members in the form of report, that is reporting. These are the stages of a bank audit, not so important. Okay, basic question. Next, special considerations in IT environment. Now if you see, as we have already discussed at the beginning of the chapter itself, most of the operations of a banking company will be automated. So information technology plays a very crucial role in case of a banking company. So while conducting the audit, in this IT environment, what are the special considerations that has to be taken into account by the auditor, and what are the information that has to be gathered by the auditor? See, special considerations in IT environment. Why we are discussing these special considerations in IT environment? Because in case of bank audit, most of the operations are automated. Let us see. Considering the importance of IT systems in preparation and presentation of financial statements, it is imperative that bank should share detailed information with the auditors. What is the information that has to be shared by the bank with the auditor related to information technology of the bank? First of all, overall IT policy, structure and environment of bank's information technology system. What is the information technology policy? That document of IT policy has to be shared with the auditor, so that auditor will obtain understanding of what type of software is being used by the bank for each of its operations, and whether all the operations are automated or there are any manual operations. All this can be understood by the auditor by seeing the information technology policy of the bank. Then bank should also provide data processing and data interface under various systems. Okay, bank should give information to the auditor relating to how the data is being processed by their systems, and what is the data interface under various systems. If the bank is using 2 or more softwares for each of the operations, let's say for the purpose of maintaining accounts of the bank they are using a particular software, and for the purpose of this internet banking, to enable internet banking they are using another software. Now once the customer conducts any transaction with the help of internet banking, the transaction will be taken care by that particular software, and the transaction should also be recorded in the books of accounts of the bank. So there should be interaction between these two softwares. So how the data is being exchanged by these two softwares, what is the interface between these two softwares? Okay, this idea, this information has to be provided to the auditor by the bank. How various softwares that are being used by the bank are interacting with each other, how data transfer will take place between these softwares, what is the interface with different softwares. Okay, next, data integrity and data security. Data integrity means how true the data is. Okay, whether the data is true or not, whether there is any possibility for third party to alter the data, to give wrong data, whether there is any possibility. Okay, how what is the integrity of the data, how true the data is, and what are the data security policies that the bank has implemented. Even regarding this, the information has to be given to the auditor. Next, business continuity plan and disaster control plans. Business continuity plan means, let's say if the server of the bank goes down, if bank server goes down, there will be lot of transactions that will fail, and this will cause a lot of loss to the bank. So once the server of the bank has failed, what is the remedy, or what is the action, or you can say what is the control that has been placed here in order to bring back the server to the normal position? Okay, how much time will take here, okay, to bring back to the normal position? This is known as business continuity plan. Due to the failure of the server, business has stopped. Now the business can be recovered if the server is brought back. So to continue the business, what is the plan that the organization is having? This is known as a business continuity plan. And disaster control plans, even disaster control plans means also same interpretation you can take. Next, controls over key aspects, use of various account heads, expense booking, overdue identification. Basically how the accounting software has to be used. Relating to this, the information has to be given to the auditor. And controls on recording various e-banking and internet banking products and channels. This we have already discussed. The transaction that has been taken place through internet banking or through ATM mission, how it is getting recorded into the books of accounts of the bank. What controls are placed to ensure that none of the transaction is skipped from recording. Okay. Next, major exception reports and process of generation including embedded logic. What are these exception reports? Basically, at the end of each day, the banking software, their accounting software CBS, it will generate these exception reports automatically. Example of exception report: anti-money laundering exception report. This is one type of exception report wherein the system will automatically find out whether there are any transactions which might be money laundering transactions. Okay, if the system has got any doubt, then it will place those transactions in this exception report. Once the transaction is reflected in this anti-money laundering exception report, it will come to the notice of the employees, or you can say manager, and now the manager, he will go to that account and he will specifically verify whether there is any such money laundering activity that is actually being taking place in that account or not. Okay, so this way exception reports will be useful, and these exception reports based on certain credentials or based on certain criteria, they will be automatically generated. They will be inbuilt in the banking software itself. Okay, so these are the various information related to information technology that has to be given to the auditor. If you go to the bank audit, all this information related to information technology will be available to you, but these aspects related to information technology are mostly related at head office level. At branch level, mostly these will not be checked. Okay, you at branch level, this will be available, exception report will be available. Okay, for branch wise, the exception reports will be generated, so you can access exception reports in case of branch. Coming to security control aspects in case of IT environment, what are the security control aspects that has to be present in an information technology environment? Let us see. First one, ensure that authorized, accurate and complete data is available for processing. Okay, ensure that no data is being missed, no entry has been missed from entering in the books of accounts of the bank. That has to be ensured. Okay, regarding that, controls have to be placed. Next, ensure that in case of interruption due to power, mechanical or processing failures, the system restarts without distorting the completion of entries and records. See, let's say for example, general example, while you are working in your office, let's say through Excel you are working and you don't have any power resource, backup power resource you don't have, and suddenly the power has gone. You forgot to save the Excel sheet, you forgot to save. I think this situation, it might be seen by most of the people. In my articles I have faced this situation. So once the power is gone, again the system restarts and the data will be lost because you have not saved it. So to avoid this, whether there are any backup resources, to face this type of situation, whether there are any backup resources, sources that are available or not. Okay, that has to be checked. Next, ensure that system prevents unauthorized amendments to the programs. Only authorized people has to change the programs. Okay, unauthorized people, they should not have access to change the entries in the books of accounts. Regarding that, proper controls has to be placed. If you see in case of banks, each employee will be having their own code. Okay, at the time of logging or entering any transaction in the books, they have to give their fingerprint, okay, thumb impression they have to give, only then access will be given to their account. So whether there are any such type of controls present in the bank or not. If you see in the bank, if you go to deposit cash, you will see there the cashier, in order to authorize the transaction, he will have to give his fingerprint, thumb impression he has to give, only then his account opens and he can enter the entry in the books. So whether such type of controls are present or not. Next, verify whether access controls assigned to the staff working match with the responsibilities as per manual. Basically, access control means, best example you can say, passwords and user IDs. Now, all the employees need not be given entire access to the books. For cashier, access to record deposits, withdrawals. This access will be sufficient for cashier. Whereas for manager, he needs more access when compared to cashier. Bank manager, he needs more access. Like this, based on role of the employee, access has to be given. Access controls will be calling them. Okay, in order to maintain, the best example of this access control is user ID and passwords. Okay, next, that is one of the control. User ID and password is one of the control which will be coming under access controls. Next, ensure that access and authorization rights given to employees are appropriate. Same example that I have discussed, same example you can take here also. Next, verify that exceptional transaction reports are being authorized and verify on a daily basis by the concerned officials. I have told you now, the exceptional reports, they will be generated by the banking systems on a daily basis. Okay, daily at the end of the banking hours, exception reports will be automatically generated in a particular folder. Those exception reports has to be verified by the banking officials on a daily basis and they have to be authorized. Whether this is being done by the banking officials or not, this has to be seen by the auditor. And verify that account master balance and balance cannot be modified, amended, altered except by authorized personnel. Ensure that unauthorized modifications can't be made to the accounts. Okay, that is related to information technology. Now, in the banks, there will be a separate department by name Central Audit and Inspection Department. What is the duty of this department? Basically, this department, it will identify the branches that require internal audit and it will appoint internal auditors for that branches. It will identify the branches that require concurrent audits, branches that require revenue audits, branches that require stock audits. All these aspects related to audits will be taken care by Central Audit and Inspection Department. There will be Central Audit and Inspection Department available for each bank. Okay, the internal audit, concurrent audit, revenue. Guys, there was a power cut, so I have to stop recording and again I am continuing from where we have stopped. We were discussing regarding Central Audit and Inspection Department, right? This department, it will be involved in identifying the branches which require internal audit, which require concurrent audit, which require revenue audit, and which require stock audit, and they will appoint the auditors respectively. Now, in case of a banking company, with regard to internal audit, what will be the process, how it will be performed? Just a general question. Risk based internal audit is conducted based upon risk assessment. Obviously, we will be conducting a risk based audit of business and control risk of the branches. Now in the risk based audit, what you will do, first of all you will find inherent risk. How you will find inherent risk? By obtaining understanding of entity and its environment, SA 315. Same auditor will do identification of inherent business risks in various activities undertaken by the branches. Another name for it is business risk. Once inherent risk is identified, auditor will see how controls are operating in those areas. By this, auditor will come to know about control risk. So assessment of effectiveness of control systems for monitoring inherent risk of business activities of branch. This is control risk. And once control risk is identified with the help of inherent risk and control risk, auditor will determine risk of material misstatement. This concept we have discussed in SA 315. Now, making an assessment of level and direction of various risk and areas and assess level and direction of overall business risk and control risk. He will determine risk of material misstatement, risk assessment. Finally, he will draw a risk matrix. What is this risk matrix? Basically, with the help of risk matrix, auditor will bifurcate various risks. Let's say entity is having some 10 risks. Now auditor will classify these 10 risks in the risk matrix. How it will look? Let's say low risk, sorry, just a second, very low risk, low risk, high risk, very high risk. Now auditor will classify all the risks into these 4 categories. Like this, he will prepare a risk matrix. What is the use of this risk matrix? Those risks which are forming or falling under very high risks or priority, auditor needs to address these risks as early as possible. So risk matrix will help the auditor to prioritize the risk. Okay, so that is the way of conducting risk based internal audit. Till now we have discussed introduction to the bank audit. Now we will see the some of the internal controls in certain areas. There are various areas in which bank has to establish certain internal controls. What internal controls has to be established by the bank and what internal controls auditor will verify in the different areas. If we see, firstly we have general controls that will be established. Next, internal controls in the area of cash. Next, internal controls in the area of clearing. Clearing means check clearing. What are the internal controls that has to be established in the area of check clearing? And internal controls in respect of bills for collection, bills purchased, loans and advances. In the area of granting loans and advances, what internal controls has to be established? All these will be general questions. If you just go through that procedure, you will be able to easily remember them. And what are the internal controls in the area of credit card operations? Okay, those are certain areas in which bank will establish internal controls. Apart from these areas, there are various other areas in which bank will establish internal controls, but in our syllabus we will be discussing these areas. Starting with, first of all, general controls. If you see, what would be general controls? First of all, in case of a banking company, the general control, the general internal control that the bank will establish is to shift the jobs of employees without giving any prior notice. This will help to identify if there is any frauds that has been taking place in the bank. So first control that has to be established by the bank is staff and officers of bank should be shifted from one position to another position frequently without giving any prior notice. If you give prior notice to them, they will make proper adjustments so that the fraud that is committed by them will remain undetected. So in order to avoid that, you should change their job roles without giving prior notice. This way you can identify if any fraud has been committed by the employee in that particular area. This is the general internal control that has to be established. Next, you have to take care that the procedure for performing the work has to be designed in such a way that work that is performed by one employee will be automatically reviewed or verified by another employee. Okay, the workflow should be designed in such a way that work of one employee will be verified by another employee. Just say, let's say for example, cash deposit. In case of some large branches, if you wanted to deposit the cash, then authorization of 2 officers will be required. Or not cash deposit, cash withdrawal. If you wanted to withdraw the cash, you will write down that withdrawal slip and you will approach the behind cashier. There will be one more person. Okay, you will hand over it to that person. That person, he will authorize and he will issue it to the cashier. Then cashier will also authorize, then he will give you the cash. A token will be given to you first of all in case of huge large branches. Otherwise directly cash will be given. Okay, if token is given, you have to wait for your token number, and once your token comes, the officer will verify and he will give you the cash. Now the procedure of cash withdrawal is designed in such a way that the work of one officer will automatically get verified by another officer. This is also one of the general internal control that has to be placed in the bank. Next, the arithmetical accuracy of books should be proved every day. If you see, generally the banking hours, bank will close at 4 o'clock in the evening, but even after 4 o'clock, employees will be working in the bank. Okay, till 8 or 9 they will be working. During this, after banking hours, the employees, they have to tally the transactions that has taken place in the day. Only if the transactions get tallied, only then they can leave the branch. Okay, after completing the after sorting out the entire transactions that has taken place in the day, only then they will leave the bank. So the arithmetical accuracy of the books has to be independently proved every day. Next, all bank forms should be kept in the possession of one officer. Okay, the deposit forms, withdrawal forms, check related forms, all these stationery related to bank should be kept in the authority of proper officer. That is also one of the internal control. Next, mail should be opened only by a responsible officer, and signatures on the letters and advices received from other branches of the bank or its correspondent should be checked by officer with the signature book. Okay, let's say any check has been received. Now you have to verify the signature on the check with the help of the signature book. Next, the signature book and telegraphic code book should be kept with the responsible officer, and access should be allowed only to the authorized people. Signature book and the telegraphic code book. What is this telegraphic code book? Basically, this will be useful in case of SWIFT transactions. Okay, in case of SWIFT transactions, there will be foreign payments. Okay, there basically no transfer of money will take place, but from Indian bank branch to foreign branch, a message will be sent stating that we have authorized the transaction and you allow our customer in the foreign to withdraw the amount. Okay, for this message has to be properly encrypted. For the purpose of encrypting the SWIFT transactions, the telegraphic code book will be useful. Okay, so the telegraphic code book and the signature book should be in the custody of proper officer. And the bank should take insurance policy. Even taking insurance policy is also one of the internal control. bank can take insurance policy related to risk of fire, natural calamities, theft. Okay, against theft also insurance policy can be taken. And employees infidelity. Infidelity means lack of loyalty. Okay, lack of loyalty. Now some employees, they might commit fraud, they might misuse the funds of the bank. Okay, in those cases, to avoid those cases also, insurance can be taken against such frauds which will be committed by the employees due to lack of loyalty of employees. Okay, and the financial power of officers of different grades should be clearly defined. The power of each officer has to be clearly defined. Which transaction can be performed by which officer, to do a particular transaction, whose authorization is required, this has to be clearly defined. So these are some general internal controls that has to be present in the bank. Now coming to the internal control in the area of cash. First of all, cash in the bank has to be kept in the joint custody of 2 or more officers. Okay, 2 responsible officers. It should be in the joint custody. Cash should not be held only by one officer. It should be in the joint custody of 2 or more responsible officers. That is the first internal control that has to be present with respect to cash. Second internal control, every day the amount of cash that is physically present and the balance in the books has to match. They have to be tallied. That is the second internal control. See, actual cash in hand should agree with the balance shown in a day book. And also, in addition to normal checking by chief cashier, the cash should be test checked daily and counted in full occasionally. Okay, every day the cashier, he will check the cash. Apart from cashier, another officer should also occasionally, he should fully count the cash balance that is available in the branch. That is also another internal control with respect to cash. Next, this is important. Now, cashier will be having physical cash. Now, if you also give cashier access to customer's account, customer's ledger account, then there is a high chance that cashier might misutilize the cash of the bank and he might do related adjustments in the customer's account. So to avoid this, cashier who is having access to physical cash should not be allowed access to the customer's ledger. Okay, see, the cashier should have no access to the customer's ledger account and day book. If he is having access to customer's account, then there is a possibility that he might alter the transactions to cover up the misutilization of the cash that he has performed. Next, counterfoil of cash receipt vouchers should be signed by officer in cash department in addition to receiving cashier. Okay, if you wanted to deposit the cash or withdraw the cash, a cash receipt will be written. That cash receipt has to be signed by at least 2 people. Okay, cashier will however sign, along with him another officer in the cash department has to sign that voucher. And payments should be made only after vouchers have been passed for payment by authorized officer. Okay, if a customer comes to you to withdraw the amount has should not be immediately given to the customer. First of all, the withdrawal slip has to be authorized by another officer. Okay, some higher officer has to authorize the withdrawal. Only then the cashier can give the amount. And high value receipts and payments should be verified by higher officer or the branch manager. In case there are any high value cash transactions, those have to be properly verified by the higher officers or the branch manager. So these are certain internal controls with respect to cash. Just general answer. Next, coming to clearing, check clearing. What is this check clearing? Now generally, in case of check, there will be 2 banks involved. One is issuer bank another one is receiving bank. Now let's say Mr. A has to make some payment to the Mr. B. Now Mr. A, what he will do? He will give check to Mr. B. Check to Mr. B. Now let's say Mr. A's bank is HDFC bank. So he will give HDFC check to Mr. B. Let's say Mr. B's bank is SBI bank. Now in this case, HDFC bank becomes issuer bank because check is related to HDFC bank. So HDFC bank becomes issuer bank. Now once a check is given to Mr. B, Mr. B will deposit that check in the SBI bank. So here SBI bank will become receiving bank. Okay, hope you are clear with this. Now once Mr. B deposits the HDFC check in the receiving bank, what this receiving bank it will do is, it will send the check to clearing house. There will be a particular clearing house which will clear all the check related transactions. Basically the receiving bank, it will not send the physical check, instead it will send the soft copy of the check. What it will do is, once the receiving bank has received the check, okay, Mr. B has deposited HDFC bank check now the receiving bank, it will scan that check. Now the soft copy of check is available with the receiving bank. Along with check, it will also scan various security code will be present and some MICR code will be present for the check. All those details will be properly captured and that details will be sent to the clearing house for the purpose of clearing. Now the clearing house, it will clear the check and the amount will be debited from the account of Mr. A and amount will be created in account of Mr. B. Okay, now the check is there, na HDFC bank check, physical check. That check, because the receiving bank has sent soft copy of the check to the clearing house, physical check is still present with receiving bank only. The receiving bank, it will truncate the check. Truncate means it will tear off the check. Okay, it will smash the check. That is known as truncate. This process is known as CTS. CTS means check truncate system. Hope this is clear. So this is how check related transactions will take place in the bank. Now let us see what are the internal controls that has to be established in this area. See here, first of all, they have I have explained what is meant by a check truncation system. Here you can find check truncation system. I have already explained you. Now coming to the internal controls with respect to clearing. As per RBI guidelines, the branch is required to either call the customer or email him for any check received for amount of 5 lakh and above in respect of inward clearings. The auditor may verify the compliance on test check basis. Now, as per RBI guidelines, whenever bank receives a check for an amount of more than 5 lakhs, then an intimation has to be given to the customer stating that a check has been received by us in your name, to be debited to your account, and the amount of check is exceeding 5 lakh. Whether this check is actually given by you only, because once check is cleared, amount will be debited from your account. So the bank has to communicate with the customer if the amount of check is more than 5 lakh. This is the one of the internal control that has to be established with regard to inward clearings. Now what is this inward clearing? what is this outward clearing? Now let's say here we have discussed this example na. Mr. A has issued HDFC bank check and Mr. B's bank is SBI bank. This is known as outward clearing. Okay, now SBI bank, it will send the check of HDFC bank to the clearing house. This process is known as outward clearing. Why it is known as outward clearing? Because the receiving bank is SBI, but the check belongs to HDFC. Both the banks are different. That is the reason why you will be calling it as outward clearing. For the purpose of clearing the check, it has to be sent out of the bank. So we are calling it as outward clearing. So what is meant by outward clearing? When issuer bank and the receiving bank is different, then it is known as outward clearing. What is inward clearing? Opposite to it. Let's say if Mr. A has issued SBI bank check only. He has not issued HDFC bank check. He issued SBI bank check. Mr. A is also having account in SBI bank, so he issued SBI bank check. Now Mr. B is having SBI account, so he will deposit this SBI bank check in the SBI bank only. This becomes inward clearing because here issuer bank and receiving bank are same. So that is inward clearing. This is the difference between inward clearing and outward clearing of check. So in case of inward clearing only, you have to make a communication with the customer, because the customer details will be available with you, because both the customers who is giving the check and who is receiving the check are your customers only. So you have to communicate with the person who is giving the check, asking him whether he has actually given the check or not, Whereas in case of outward clearing, that will not be possible, because in our example, Mr. A is HDFC customer. How can SBI bank will be having details of HDFC customer to communicate with him regarding the check amount? So in case of outward clearing, this requirement of communicating with the customer if the amount of check is more than 5 lakh is not required. Hope that is clear. Next, the auditor is to check whether signature of the drawer of check is being verified by the staff or not, or else there will be liability on the paying bank. Basically, whenever a check is issued, the bank, before clearing the check, it has to verify whether the signature that is present on the check belongs to the issuer or not, issuer of the check or not. That has to be taken care. Okay, the employees of the bank has to verify it. And the unpaid checks received in outward clearing should be either sent to the customer at their recorded address, or the customers be informed to collect the check from the bank branch. Okay, in case the check is uncleared, the bank will not keep the check. It has to give back the check to the customer. Uncleared checks. Okay, so these are certain internal controls with respect to clearing of the checks. Okay, still we have certain bills for collection, bills for purchase, loans and advances. These concepts we'll discuss in the next class. I'll be winding up this class as of now. Okay, take care, bye bye, see you.